Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Sunday BBQ. It's Sunday, August the 17th. I'm Phil Carroll.
And I'm Kevin Wolsby.
What have you been up to, Kev? It's been a while. I mean, it feels like we're in the middle, certainly in the UK, we're in the middle of I think it's the fourth heat wave counting. It's absolutely crazy temperatures. I mean, I don't know if you saw in Europe, it hit 45 degrees in France, Portugal and Spain, living into this big giant heat dome was going. And what's it been like in the Med?
It's been about 35 degrees here, so it hasn't been too bad, but yeah, I get a bit of a headache from the sun, to be honest, but such is life. I've been working a lot, to be honest. So much for everybody going away in August. Everybody seems to be still putting news out. But next week, that's it, putting the signs up, and I'm not about for the next 10 days. I need to get away from this phone, actually, to be honest.
Yeah.
Put it in the bag or in somewhere and not look at it.
Yeah, I think a digi-detox. I did that a couple of weeks ago down in Devon and just switched off for, even just 4 or 5 days. It's amazing how much you pick up a good book, spend some time out in nature, walking with the family, coastal paths. It was a real nice digital detox, to be honest. So if you can get away from it for a few days, then yeah, please, a big good thing to do every now and then.
Yeah, absolutely. So yeah, in the world, what's been happening?
Well, I mean,
solve the problems.
Yeah, the biggest news story of the week, probably the only one that's worth sort of talking about, is obviously we saw Donald Trump meet Russian President Vladimir Putin at a military base in Anchorage in Alaska for what is, I guess, a high-stakes talk aimed at resolving the war in Ukraine. The summit, as it was called, concluded with no formal agreements, such as any kind of ceasefire or next steps. While both leaders labelled discussions productive, Trump denied any deal despite Putin's suggestion otherwise. And I guess the optics, including, I don't know if you saw it, but there was certainly rolled out the red carpet welcome for Putin. And I don't know if then he saw, obviously, Putin walk down the steps of the plane and was jumped into the president's, or they call it the Beast, which is the big sort of, military, armor piercing, armor protected, military cavalcade, isn't it? His big black limousine, as they call it, the Beast. But I mean, what did you make of that, firstly, the way they welcomed him, and what message did that send to the Ukrainians?
It's hard to say, isn't it? Because you can't disrespect him, and at the same time, maybe you can't roll out the red carpet, but that's what they did, isn't it?
Yeah.
It's difficult. Maybe Putin dropped a few listening devices in the Beast, so he'll be able to find out a bit more information.
Yeah, I mean, the interesting one,
I don't know. What was it? I don't know whether it was a fake thing, and this is the problem with AI these days, isn't it? That Putin was allegedly basically saying that if Trump had been in the White House, the war would never have started.
Yeah.
Now, if he actually said that, that's got to be scripted that Trump needs him to say this.
Yeah.
It's absolutely bizarre. Either scripted, or Putin's not stupid, and Putin needs to know exactly what Trump needs to hear so that he can get him on his side.
Yeah, no, you're absolutely right. The big one.
Pray that the war finishes, and that's
I mean, that's the thing, isn't it? I mean, 1.3 million Russians died. I mean, dead, injured, maimed, whatever you want to say. I mean, the loss of life in that war has just been incredible, really. But I mean, the critics were quick to underline the fact that Putin is subject to an international criminal court arrest warrant, that was issued on the 17th of March, I think it's 2023, for these alleged war crimes related to, obviously, forced deportation and transfer of Ukrainian children and massacre, genocide in Bucha and places like that around Kiev. So most other countries, as soon as he stepped foot on that tarmac, he'd have been arrested.
Yeah, I would like to have seen that happen. Not.
Yeah. And then I guess, as we said, the Ukrainian officials came out and said that Trump did the scene with Trump enthusiastically greeting Putin with this applause was humiliating. And then we saw on Saturday morning the announcement that Zelensky has emphasized that the Alaska exchange should have paved the way for a genuine three-party dialogue. And then they announced that Zelensky will be heading to the White House on Monday after Trump talks with Putin end with no deal. Trump is going to host him in Washington at the White House on Monday. And I believe the Ukrainian leader has said that, and the pair had a very long and meaningful chat after Trump's summit. So good to see maybe that he's going to invite Zelensky there, and they're going to thrash things out. Maybe there's going to be some sort of deal. But I think as long as Ukraine want to join NATO, we're not going to see any sort of deal or ceasefire.
Yeah, I hope he's going to wear a suit this time.
And say thank you.
And say thank you for nothing, or for many things. Anyway, without getting too politically thinking, all this does is cause more and more uncertainty. And we've got more and more uncertainty. We've got the dollar depreciating. We've got gold going up. We've got Bitcoins going up. And now we have our first guest.
Okay, let's move on to our first guest this week. We're joined by Malcolm Palle, Executive Chairman, and Eddy Travia, CEO of Coinsilium Group. Coinsilium is an AQSE-listed digital asset investor and venture builder with over a decade in the blockchain space, backing early-stage ventures and managing a strategic Bitcoin treasury through its Gibraltar subsidiary, Forza. We'll be talking about their latest £5 million Bitcoin purchase, the company's broader investment strategy, and how they plan to address the recent share price decline. Welcome to the podcast, gents.
Thank you for having us, guys.
Thank you. Hi.
Absolutely. Yeah, I mean, I'm assuming you guys are working hard. I mean, it's obviously summer period, and Kev and I were talking earlier about quite in the past, a lot of companies went away and August was a shutdown, but we're seeing a lot of news flowing recently, in August, where we've pretty much done a lot of recordings, and it feels like the city's buzzing and alive.
Yeah, look, this space, particularly this space, doesn't sit still. I think a lot of traders take holidays, and a lot of people in the institution still manage to get away on their yachts when they need to, and they leave the volumes dip, they leave a few people behind. The retail never sleeps. And that's really something that you're thrown into the forefront of when you're in this space, particularly how it kind of exploded onto the market in June. But we're still working very hard because there's lots of stuff we've got to do. As you quite rightly pointed out, when we spoke earlier, the market's changed a lot, and that doesn't stop us having to do what we have to do. It's just that you sort of got the tailwind, you've got crosswinds now. That's how I'd put it.
Yeah, absolutely. So, I mean, before we move on to the Bitcoin strategy and share price performance, can you just give listeners a clear snapshot of what it is that Coinsilium actually does, today and in the past, your kind of core business model, main revenue streams, and how your Bitcoin treasury fits into that bigger picture, please?
So as you said, we are a digital asset company in the sense that we started as mainly investors. So, we've been on AQUIS now for 10 years or nearly 10 years. And we have our first proposition was to expose retail investors to blockchain, which is a very specialized type of industry. And especially in 2015, there were not many people who were looking at it as an investment proposition. Then we moved on to become quite active advisors of different projects on blockchain projects. And then obviously we have been following up and managing our investments in the space. And more recently, as you were saying, it's a process that started last year, but we announced it in January 2025, is we have now a wholly owned subsidiary in Gibraltar called Forza, and that is the Bitcoin treasury arm of Coinsilium, the company that actually is operating this Bitcoin treasury strategy. And this has been extremely active since mainly May, when we started raising funds specifically for buying Bitcoin. That has gone pretty well, as we have raised since May, I think about nearly 17 million pounds, and most of that has been spent on our Bitcoin treasury, which is now nearly 182 Bitcoins.
Very good. Yeah, absolutely. So, I mean, we've seen a kind of 52-week high of 81 pence, which is very impressive. And also other Bitcoin treasuries up at these all-time highs this year. And then a significant pullback pretty much across the board. So do you see a kind of sentiment returning to these types of Bitcoin strategy plays?
I think it will. I think at the moment there's a lot of people in sort of the hangover stages of what was an explosion that happened when the model with us and various others started coming on the scene. And you really have to sort of take a step back and think about how compressed a space of time that is. That was in May, which was 2.5 months ago. You don't usually get a cycle playing out so explosively and quickly. So it's kind of, looking back on it, sort of understandable why and how it went so high, because the driver from our perspective is the lack of options for retail investors to get exposure to Bitcoin. The FCA there's been a ban in place on retail products suitable for retail investors, such as exchange traded notes and exchange traded funds in the UK. So when you come along and you're pretty much the only or the main option, it's the start, you do get a lot of exuberance, and it's not easy. There's no way as a company we can manage these things. We have to put out the news as it happens, and that's the tails of the coin. The heads of the coin is that it attracts a lot of capital into the space, and it gives you the opportunity to do something which with another set of circumstances in climate you wouldn't be able to do. And that's what we've done. And until now, you of course, moving forwards, I think, coming back to your specific question, is I think the sentiment will return for sure, because unless something drastic happens to Bitcoin, which we don't anticipate, it will return, and then we'll get to and I don't think it'll take too long for that to happen. Probably the summer's not the best time to expect it, but once we get into September, I'm sure it'll be a very different set of circumstances. But you've got to be really focused and really level-headed about this stuff, because it was a crazy time to actually start this. So I think we'll look at maybe phase 2, the next iteration, chapter 2, what that looks like. You might find that the compression of what we refer to as NAVs, MNAVs, might play into the model, and people are perhaps a little less ambitious on those. But if you've got, I think the key for us, which we'll probably come on to later, is what differentiates us from others out there, because I think people will be looking at the differentiator, because if they can't guarantee a return on a one-dimensional model, then you have to see if there are other dimensions to what you're doing, rather than trying to split the atom.
So Malcolm, you mentioned coin, which was a very nice pun, well done. So now we want to flip the coin in terms of not just both sides of the coin. If you were investing from now and you have 182 Bitcoins, you have in excess, I think now, of £20 million or $20 million worth of Bitcoin. You have an MNAV of, I think, 1.4 or somewhere around that, a market cap, and a share price of about 5p. You got to look at it and say, this is a damn good investment now, surely. Now, that's one side of the flip coin. The other side is that you've got a huge number of people who invested much higher, okay? So we've got to be absolutely honest. You're going to have two groups of people listening to this. One who's saying, in much higher, and, how did this all happen? And the second group is, I never entertained this, but now I've got to look at it and say, is this a good investment? So I'm going to ask you both individually. So Eddie, how do you see that first? And then I'll come to you, Malcolm.
So yes, I think what happened a lot for people who came in, it has been kind of, there has been the only reference I have. There are two references I have for what happened in June, because in June is when the price went up a lot and the trading volume was huge as well, which has been very, obviously very good for us and for the other companies in the space. But I can compare it first to the internet, because, there was really a lot of overall, not only in the UK, but overall, a lot of money invested in Bitcoin treasury companies or other what we call digital asset treasury companies. So there is this kind of a global wave of new companies coming up and a lot of money coming into this space. So very much like what happened in the internet, because something unexpected happened is we didn't anticipate that a lot of the interest in the space would actually now starting to come through what we call traditional markets, traditional finance markets. We have, Malcolm and I, through Coinsilium, we are very much used to the fact that a lot of money comes from the crypto investor side of things. And now we see this actually a lot of retail investors from the traditional market, stock exchanges coming into this space and enabling companies like us to buy a lot of cryptocurrencies. So this is, I think, the reason why it has been a bit of a interest and in price is because there was no real blueprint, in the sense that it's a new product, it's a new market. So people didn't really know what to expect. And at the same time, the only fundamentals, or the only, I would say, the minimum value is people are looking at is just the Bitcoin value that companies hold. So it definitely went very high on the basis that there was this kind of general movement. So I would say at this time, things have become more reasonable in many ways, in the sense that the MNAV now represents maybe 1.5 for us and maybe a little bit more for others. And now there are many, many more companies people can compare to and look at the numbers. But I mean, as you were saying, it's worth considering these kind of companies now, given the metrics and given the measures, given the history, and given the fact that we can talk about it later, we don't only have Bitcoin investment, we also have other investments in different companies. So we believe we have a bit of an edge there.
Yeah, I mean, I concur with everything Eddy's just said. Another dimension, sort of with my investor hat on and what I would be looking at now, and I've got to obviously be measured in what I say, being the chairman of the company, but I think that when the price goes down, it takes sentiment with it. When the price goes up, everyone thinks it's going to go on forever. We're stuck in the middle just watching this play out. But I would say to investors who are looking at us now and seeing literally round trip this, if they have, to a degree, not everyone takes money off the table for whatever reason, is that you've got to look at where we are now, compared to where we were at the beginning. It's not where the aspirations a lot of people sort of certainly were pointing, but if if we were dead in the water, that would be a very different scenario, but we're clearly not. We've got, over 20 million in Bitcoin, which is what we certainly didn't have that when we started the process in May, and we've got sufficient cash, obviously, to ensure that we don't have any issues with our auditors and for going concern stuff. We can also look at that to bolster our ongoing position, and we've kind of got to see what happens with the market. We're still working on the assumption that the markets will support us. And we've got other investments. And when I say the assumption that the market will support us, I'm talking about once the lull of the August kind of hiatus to a degree with the more general market sort of, wanes and we start getting into a more active season, plus Bitcoin gets a bit of momentum. And then we go again. I say we go again. I don't expect it to be the same as it was before. And our story when we're talking about raising funds to buy Bitcoin going forward is still very much focused on that being our strategy. But we will need to, everyone's learned this lesson of the, what's happened with this round tripping across the board and the blow off. We are going to have to, we're already being told, we're going to have to talk about what else have we got. We're not just one dimensional, don't forget. We've got other investments.
Yeah. And
that's something that people are going to look at, and the market and brokers are going to look at, to actually tell their clients and investors that, we're not a one dimensional, one way bet on Bitcoin. We've got other aspects to our business which are underpinning it. Plus, we've got the Bitcoin and everything else. So that's when I talk about the 2-dimensional, possibly 3-dimensional model playing out. So,
so before we come on to that, Eddy, I'm going to, Malcolm.
Yeah.
Eddy, I'm going to ask you, where do you see, you have 182 Bitcoin at the minute, and I'm sure you're going to add to it over the next period of time. But where do you see Bitcoin going in the next year, 3 years, 5 years, 10 years? I mean, quite obviously, this play is not a snapshot in time, as there's Bitcoin, it's worth $120,000. Where do we see it going?
So traditionally, we have been working on a 4-year cycle, naturally coming from Bitcoin, but by coincidence, we macro events as well. So every 4 years, the miners get half of what they normally get in Bitcoin. And as we go on, it continues every 4 years. So of peaks in Bitcoin in a range of a year or 18 months after the halving. Now, what is happening now, which has been different, is on one side we have the major economy in the world, like the United States, that is officially, at least at the White House level and the SEC level and so forth, officially kind of endorsing cryptocurrency and especially Bitcoin, and saying, we're not going to sell Bitcoin, working on making sure the SEC is not stopping companies from doing business in cryptocurrency and Bitcoin. So we have a new wave now. We also have of adoption, the fact that over the year already more than 3 million Bitcoin have been bought by now public companies and institutions, and that includes the ETFs, so forth. So it's possible that the 4-year cycle actually gets a bit attenuated and it's not as strong as it was before, because we have all these companies and even some governments like El Salvador holding Bitcoin now. So in terms of Bitcoin, I think there is always a correlation, or at least an impact of macro events. So if the US start going down like everybody expects them to this fall, then it's likely that most assets, including Bitcoin, should do well, should increase in price into 2026. I was asked recently at an event in London, I was doing it online, I was asked my price prediction. It was $250,000 for one Bitcoin in 1 year's time, or about July 2026. It's still possible. I think there are some macro events, and the fact that companies still accumulating Bitcoin, mainly public companies, ETFs all over the world, and some macro events that should drive the price higher. And this could go on until 2027 or 2028, as long as there is still this demand from these large companies. And I don't see this fading away anytime soon, especially in the context where, dollar, the consensus, at least in the people who are in the crypto space, who have some notions of economy, is that there will be more dollar printing occurring to repay the dollar debt, etc. So there is a potential natural tendency for assets such as cryptocurrency and Bitcoin to go up in price over the next 3 to 5 years.
Yeah, and we see in a lot of ways that there is a mirror here, and the mirror that I see is that a lot of the central banks have been buying large quantities of gold, okay, because they fear the loss of value in the dollar, okay. And in the crypto world, are we in the same boat? Only it's not maybe the central banks that are buying it. It's basically institution companies set up such as yourselves who have said, I want my asset base in a non-denominational way, if you like, so not in dollars, but in Bitcoin, which is basically not denominated against anything, even though we see the price in dollars. We can also see the price in British pounds. We can see the price in euros. In essence, the euro price of Bitcoin hasn't actually gone up anywhere near as much as the dollar one, because the dollar one has actually had a decrease in the value of the dollar. So what's your thoughts on that?
Yeah, I agree. And also the fact that Bitcoin has no political connection to any countries and to any government, which makes it that powerful and that resilient. I mean, when we started in this space, I was thinking it's a definite incredible asset for governments, because you can, like the US is doing these days, they're kind of supporting it openly, and it's still independent. Bitcoin is still not controlled by the US. It's not controlled by anyone in really. It's really a kind of very free market type of asset. And all the exchanges that have been opening so far have been private companies. And then you have the decentralized finance exchanges, which are also private companies. So at the moment, there is no control. And that's why I think it remains a great asset for a lot of governments, a lot of very large institutions who don't need to take a position, because of course with currencies, if you go for, Chinese yuan, or if you go for the dollar, if you go for other currencies, you take a position. But with Bitcoin, it's apolitical. There is no position. So I think that makes it a great asset for very large institutions and governments, and also makes it a great asset for individuals who don't have to suffer the monetary erosion that you get from inflation, from higher rates and so forth that we have seen over the last decades. So it's really an ideal of asset to hold on the long term.
So yeah, I mean, beyond Bitcoin, which we've obviously talked about quite a lot of depth, but what near-term catalysts from your wider investment portfolio could potentially help re-rate the stock and demonstrate growth beyond the treasury gains?
Yeah, as I refer to, we're not a one-dimensional model. We've got a portfolio of investments which really do back up, from our point of view, our valuation potential, and they're across a spectrum. There are some that are long-term, but we've got one particular investment that is pretty much coming to the point where we will expect a value crystallization event, which is a project we're invested in called Yellow Network. And Yellow is it's an enormously ambitious project. We invested in it in 2022, 3 years ago, when it was just pretty much an idea. And it's completely de-risked now. We got probably the best level of valuation that was available. and it's as I say, just finishing its or just rounding up its Reg D token sale. And we anticipate that they will announce the launch of the token in hopefully once they've announced the close of the sale or at some point in thereafter. The key point to this is that it's an extremely ambitious project, which a lot of people, and unless you take a deep dive into it and understand what it does, but ultimately it you won't understand, you won't appreciate the huge potential and how ambitious it is. But Yellow Network, if you imagine that they acquired the name, or the founder Alexis Serko acquired the name Yellow as a domain name, you'd think about how much that cost to buy yellow.com in 2018. So he knew what he wanted, and he had the money, and he bought the name, and then he built it. And this has got the potential to be a huge project because it addresses a massive problem in the industry, which has effectively exploded from the cryptocurrency blockchain came from grassroots. It wasn't something that was dropped by Microsoft or some big corporate conglomerate. And every ancillary activity in it has been built from the ground up as a kind of a hack to solve a problem. And such even exchanges don't use blockchain to actually they're silos. So you've got liquidity issues and you've got trust issues. And this solution addresses that. So it takes the trust element out of trading. At this point, it's probably better to keep it at high level and people to do a deep dive into it. But it could be the most significant token on the market since Ethereum from our perspective. Of course, there's a lot to do and they've got a long way to go. But if it does what I say expecting it to do, that's a strong word, expect, but what their ambitions are for it to do is to solve the issues of trust, people trading against you, just like Bitcoin solves the issue of trust when you're trading with someone, when you're exchanging value with someone for payments. You don't have to trust the counterparty with Bitcoin. So for trading, which is 10 times larger than payments, this removes the trust element from that. So it's not just me saying it. They've got 2 million users onboarded. They've got a team of 100. They've got the founder of XRP, Ripple, behind them, led a 10 million round. And we're the only public company that has exposure to that, and from a very early stage and a very low valuation. So we will start talking about that.
Yeah, I was just going to say, I've just had a quick look on their website while you were just talking then. I've not really looked into them, but they have actually on their X account have said that the public sale is live on the Join Republic with, as you say, the Reg D round open. So you can actually claim your spot by visiting republic.com/yellow as well. But what does your investment in Yellow look like? I mean, can you tell us a little bit more? I mean, you're the only public company or also listed company that has an actual investment. Just tell us a little bit more about that.
Yeah, it takes the form of what is referred to as a SAFT, SAFT, which is a simple agreement for future tokens. So that was in one of the early funding rounds, which they've now published, kind of made public along with the Republic sale. We haven't disclosed to market at this stage because we're not permitted to the amount of tokens that we are entitled to get at launch. And what we expect to do, and we expect to be able to do, is once the launch has occurred and then the token is on an exchange, we hope and expect to be in a position. I'm being cautious just because I'm a director of a public company and I don't want to make promises. If there's a point,
tell us, Malcolm, tell us.
What's this? What point?
1 billion tokens and everybody.
Is it 10% or is it 5% of the company? I mean, come on.
No. Listen,
let's keep it on ice. Because
you send me some stuff, Malcolm, and in terms of looking at it, and I listened to Alexis Sakia, is it?
Yeah.
Circa for 40 odd minutes about this Yellow Network, and effectively what he's trying to do is he's trying to replace banking in essence. No,
well, it's working. I mean, it might be doing it with a Trojan horse approach. But it's certainly not alienating the banks. They've announced a company called Avalanche.
The banks are going to want to use it for sure, but ultimately he's creating a highway, a trustless highway. I think this is the best way to explain it. It's a trustless highway. So in other words, you have no issues about whether you trust the other party.
Correct.
Basically, correct. You're going to put your deals on this. You're going to trade your deals, and all will be sorted in the blockchain. Probably at the end of the day, rather than just
Oh no, it'll be in real time. This is the point. This is the crazy thing about this project. So firstly, he's looking and talking to banks, and by the way, he's announced he's buying a bank as well, personally, because he's not a man of insignificant means.
Yeah,
and
he has a very nice hat as well.
Yes, he has. But he was the co-founder of the largest market maker, GSR. Circa is the S in GSR. And he's worked with, Chris Larsen from XRP, from Ripple, from pretty much the early days. So he's in that stratosphere. But the approach with the banks is to actually get he speaks about they're working with Avalok, which is a kind of a software company that provides solutions for some of the largest banks. But the problem with banks and, getting involved with crypto, let's just fast forward and say that we're going to at some point be following the same trajectory as they are in the US, which has already passed executive orders and rules so that banks can get involved with crypto. It's going to take them a few months to get to where they need to be, but say we follow, which we expect to do because the momentum's there, and then banks want to start offering their clients Bitcoin or other cryptos, they want to use it for other things. Their main problem is they're going to have to buy the Bitcoin from somewhere, and they're either going to go to crypto exchanges who they are going to have to trust, or they're going to go through decentralized finance mechanism, and they're going to have to deal with those there. So this solves that problem, because what they're using is technology called state channels, which effectively allow streaming of money. So it's the streaming of a profit. Say I buy a coffee from you, and you're selling coffees in your coffee shop, and I'm buying 5 coffees an hour and three whatever, and you're trading with me and I'm selling biro pens. I can't think of the stupid examples, but every time
you're selling me the coffee beans and I'm giving you the coffee.
Exactly. So if those are happening in real time, there's trades going at the moment. What you do is you settle at the end of the day, and you only can settle if I'm trading, the other guy I'm trading hasn't paid me, and then I can't pay you, and then you can't pay someone else. That's where the problems come, and that's what happened with the Lehman Brothers issue in May. So this streams the profit in real time. So as soon as there's a trade done between people, that streams itself. So there's absolutely no latent settlement. Your book is always flat with the other person once the trade is done. Now that is an idea that Alexis Circa had, but he didn't know how to put it into place, and it took him the best part of 7 years to actually, as we are now, to come up with a solution that actually works and the working model works. So think about it as something that, you don't realize how incredible it is until it's born. A little bit like ChatGPT. You just stand in amazement, and it solves that problem. And, that's what this is what this bet is on. And they're already getting, takers that are increasing the confidence level and de-risking it. It's by nowhere near where it needs to be to actually be something you can, rely on. They've got to implement it, but it's backed by big money. They've got the community building, and we're the only public company we've got exposure to.
Yeah. So that was my next question so the Yellow Network isn't going to be a listed entity, but you're going to be able to buy coins in it as an investor. But you are one of the only institutions, and especially one of the only institutions in the UK, who's going to hold some of the Yellow Network.
Yeah, we'll have tokens they won't go into Forza treasury because they're not treasury assets, but Coinsilium will own once the tokens launched and the tokens are issued. We will own a chunk of tokens, and as things stand, there are no other public companies that you can buy shares in that will give you exposure to Yellow.
And Eddy, you're hopefully back with us now. How many tokens do you have?
Yeah, it looks like I'm still out.
Yeah. Okay.
I'm sorry, I'm breaking up.
I'm breaking up.
Well, we're very happy. I'm sorry to jump in, but Eddy's not going to answer you. I'm not going to answer you either, but I'm going to give you a lot of fluff that will actually hopefully you'll be able to extract. We can't give the actual number, as you well know, and as I say, we hope and expect to be in a position to once the token launches. But it suffice to say, we put 200,000 in a very, very early stage, and dollars, and we expect to have a meaningful amount that will move the dial, put it that way.
Okay, so going past the yellow network, tell us a little bit more, Eddie, about, you mentioned before when we were having a chat, you've got GGS, you've got Green Gauge, you've got Rockpex, you've got Automator, I think it was, if I pronounced that correctly. Tell us just a little bit more about other assets that we have within Coinsilium.
Yes, these are also investments we have done over the last few years. So, for example, Green Gauge, this is a team I met recently in Dubai and Abu Dhabi. They're originally from, based in the UK, but they have been accepted in the Hub 71, which is the main finance-focused accelerator in Abu Dhabi. It's a digital finance pioneer in the sense that they are basically providing loans to SMEs and kind of linking family offices or high net worth individuals, lending money to, for example, small and medium enterprises. And there is an angle to crypto in the sense that the collateral for the loan can be cryptocurrencies, and the loan itself can be done in, for example, stable coins. So initially they wanted to serve the crypto industry or the main actors in the crypto industry because, banking or money services, they have an e-money license, and they can provide e-money services to entrepreneurs and SMEs and startups in the space. And they saw, and they were right, that it's an underserved space industry. And so they took that they took that focus, and they've now expanded into the Middle East. And Dubai is actually one of the major global crypto hubs in the world. You have a lot of crypto trading going on there. You have a lot of crypto companies. So they're doing very well in that sense. Yeah. The other company that I can mention, for example, is GGS. So GGS is a gaming company. It's an experienced team in the world of esports and gaming. Their initial idea was to help, because they are from South America, their initial idea was to help what they call AAA gaming studio to expand into Latin America. And they have done a pretty good job at that. They've worked with the largest brands, largest studios in the space. And then with GGS, they also helped what we call Web3 gaming. So Web3 is kind of a very broad term that generally means companies that are either decentralized or using cryptocurrencies as utility tokens, or using blockchain as a technology. And there are games that are using blockchain as a technology, so they helped a lot of these games going to Latin America. And now, more recently, they started investing in these games. You can buy future tokens, or and buy NFTs, which can be in-game assets or in-game tokens. It's very specialized, and obviously we are not expert in gaming, but we rely on their expertise. And we rely on their business acumen. They are very good at spotting that have been doing very well, and it's not easy because it's a space where there are a lot of players and not many winners. So they have been doing very well in spotting and identifying the right opportunity. Yes, and so that's GGS. The founder was based originally in Colombia, and now is based in the Philippines, where he has also actually with very large Web3 gaming companies in the Philippines. Philippines is quite known in crypto because it's the place where a very famous game called AQSE Infinity, which has been invested by Andreessen Horowitz, A16Z, has been extremely popular. The other companies you mentioned that are in our portfolio, yeah, I think these are the main ones that we are focusing on at the moment. Yeah.
Okay, and Malcolm, do you see as you progress that yes, you are going to be a Bitcoin play, but there is potential for more investments in some of these early seed rounds of these type of tech companies?
As things stand, the most compelling investment is Bitcoin. Everything else that we've done up till now comes with risk, and a lot of things, not everything's going to come off. In fact, a lot of things won't come off. So, when we invested in startups and, all the investments we've made, we have to go through that process of getting the best possible price because it all has to be risk adjusted. But with a new dynamic of our treasury, and as the market is evolving, we are focused on building that treasury because at the moment there's no impetus, there's no urgency for us to invest in any other new startup or any other kind of use for our cash, and it's not what the market would want us to do. And whilst Bitcoin is pretty much, as far as we're concerned, a one-way bet, we're just putting all our money into there, and it's at a point of time in the future, because don't forget, Forza as our treasury is there for the benefit and to create the resilience for Coinsilium as a business. So if at some future point in time, Bitcoin is, at a significantly higher level than it is now, and an opportunity comes along that we actually have to, seriously consider, we'll take a view of it then. But for the foreseeable future, I think investors can rest assured, completely, convinced that we are just literally focusing on growing our treasury. And, I don't want anyone to take away from this the thought that we're just sort of sitting back and just waiting to where we are. We just recognize that the valuation of our shares, for us are worth, have value. And we want to make sure that we don't undervalue our shares, even when we're buying Bitcoin, because the market will push you and push you. They don't care if you make money or lose money on a transaction. And that goes with the use for we've got headroom for issue shares, not non-cash. And that would be for the potential of doing some kind of transaction. We still need that transaction to be at a value accretive level for shareholders. So we're not comfortable at all to actually do any kind of transaction when our shares are undervalued. And once they become better valued, which will come with us articulating what we're doing in our future direction, which we will be doing, but we're an events-driven business, so we don't sort of talk too much about things that we don't actually have any visibility on. And Bitcoin, you can expect that tailwind to start blowing again, I think, once the summer wanes and even when the business cycle gets to the point where, the money printer starts again and we go again. We've done it long enough, a little bit of patience. And, again, just going back to wrapping up on what you said about people who are underwater, look at us at what we've got. I think we're priced for failure, and I don't know how that could be the case when we've got the assets we've got and we got the cash, and we simply have got the trajectory. We just need to get the momentum, which will come when you can actually build that up. Hopefully it won't be too long.
Very good. Well, I mean, on the summer theme there, Malcolm, obviously you're on the roast, or as it's known in summer, the Sunday BBQ. What is your ultimate kind of roast/summer food theme going on right now?
Oh, wow. Okay, so this is off topic. This is
yeah, absolutely. This is a food
okay.
derivative.
Well, that's good. Okay, because I'm always trying to find analogies for and maybe one will pop out of this. Look, I love barbecues, and I'm big on marinades. And if I've done anything myself that I've actually been proud of in my life, apart from anything business-wise, is that I love creating new marinades. So anything with coriander, anything with herbs and lemon and lime, and you can add a bit of zest on that. And I'm a big chicken man when it comes to that. So, I living in Gibraltar, I'm just dreaming of the day they open an Nando's here, just for my day-to-day stuff. But in the meantime, if anyone's in the vicinity, give me a call. if we've got
everybody loves a cheeky Nando's. Would you cook it on like a Kamado or a barbecue, or what sort of what's your chosen
problem? Yeah, I mean, I used to have a very old American style smoker. And that was when I lived in London and I had a small garden, and that was fine. These days, I live in an apartment. I lived in an apartment in London where I learnt through experience and mistakes that you can't have barbecues. I didn't know that at the time. I just assumed, because I'm old, and I assumed what the hell's going on. And obviously, once someone saw it, I didn't get a chance to spark it up. I got into trouble. These days in Gibraltar, I've got effectively it is a electric barbecue, but it's got smoking. It's got a ability to put some smoke, some some of these exotic woods in there or whatever, and that's pretty good. It's not ideal, but because I'm in an apartment, I can't do anything more than that. What I would say you have to do is, if anyone's thinking of moving to Gibraltar, the rules are, if you're going to light a barbecue on your balcony, you have to phone the fire brigade before you do so, and you have to tell them that you're having a barbecue, so that if anyone, and you tell them,
you need to move to Sota Grande, Malcolm. Never mind Gibraltar.
Maybe. I don't know if that will be the case, but I don't know how many people do phone the fire brigade, but you actually are supposed to, so that you could tell them where you live and what apartment you're at, and then they say, oh, it's okay, it's only a guy having a barbecue. We won't send the fire brigade. So,
wow, that's interesting.
yeah.
Eddie, what's your chosen food choice?
Okay, so I'm in Singapore, and I don't know if you're familiar with Singapore, but most condos, as they call it here, which are residences for expats or foreigners, they have barbecue spaces, near the pool or in the garden. Yeah. So we can do that. I'm mostly beef. Yeah, I'm mostly beef. I like beef. I like lamb, and I am lucky that I have a wife who can cook it pretty well. So I'm a very I'm a bit lazy and at this level, and I let my wife cook this quite well for me. So
yeah, so Singapore's very interesting.
I enjoy barbecue.
A lot of time at Singapore, and I've visited. Is it Lau Pa Sat for the all the hawker food?
Ah, yes.
It's some of the best food, street food I've ever had has been in Singapore. So very, very good.
Yeah, it's famous for that. Yes. Lau Pa Sat is famous for a lot of people coming to Singapore. Correct. Yeah.
On that note, we'll say Malcolm Palle and Eddy Travia of Coinsilium Group, thanks very much for appearing on the podcast.
Thank you very much for having us.
Thank you.
Let's move on to our second guest this week. We're joined by Oliver Friesen, CEO of Guardian Metal Resources. Welcome back to the podcast, Oliver.
Yeah, great. Thanks, Phil.
So Guardian Metal Resources has expanded its 100% owned Pilot North Tungsten Project in Nevada to 101 BLM claims after staking an additional 42 claims in response to highly encouraging reconnaissance assays. The 22 rock samples returned grades up to 5.71% copper, 619 grams per ton of silver, and a 3.45% zinc, significantly exceeding expectations. The project, located 15 kilometers from the company's flagship Pilot Mountain deposit, now covers 4 historical Second World War tungsten mines. A detailed mapping and sampling program has been completed, with further assay results pending. Oliver, just talk us through how these results strengthen Guardian's strategy to re-establish US domestic tungsten production.
No, it's a really good question, and this is, I think, a bit of an announcement that I think probably caught a few investors off guard, which is great. So what we're doing here, Phil, is really looking at the bigger picture, which is the U.S. has no domestic mine production of tungsten, and the U.S. needs a lot. We're talking north of 10,000 tons a year of tungsten. So we have our models that tell us how much we think we can produce from Pilot, Mountain, some Tempa Ute in a commercial production scenario. But what we're really looking to do is solidify our position as the champion of United States tungsten exploration and development. So what we've done is we've had a team dedicated to looking outside of our existing deposits to see what else is out there. Because believe it or not, tungsten is still somewhat under the radar. It's almost akin to antimony when, at first, after 6 months, under the export ban, the price went up, but people didn't believe it was real. So there was still an opportunity to acquire antimony projects in the US. That time has passed now. Everything in the US is completely staked up. But tungsten, we're still early. I mean, I've said this before, but we're sort of it feels like the second inning right now of the tungsten kind of bull market. So that means there's still opportunities to scoop up some really interesting stuff. So what we're trying to focus on is areas, with tungsten, confirmed tungsten copper mineralization that are within the vicinity of our existing projects. And the reason for that is what we envisage having is a mill and processing facility at Pilot Mountain, servicing obviously the main deposit areas there. But if you have within a radius of, call it 15, 20 kilometers, other zones that you could potentially mine down the line, that sort of lends itself to what we describe as sort of a hub and spoke model. And you could be mining from multiple zones and processing all that material at a central site. So we have the known resources at Pilot Mountain, obviously, in Desert Shielite, and we're moving forward the PFS on that. But looking at a bigger story here, part of our kind of recon work identified this really interesting area just north of the project that we've now termed Pilot North. And what we have there were 4 in sequence tungsten copper World War II mines. So these were mines that actually were processed and mined material in the 1940s for the World War II effort. They were sitting open. And that just, I think, once again, signifies that we are early. So they were open. And our guys were able to get some information on those. We sent crews straight up there to go look at them. And sure enough, there was no claims there. So to our luck and excitement, we immediately slapped down a bunch of claims. And the recon, and just to kind of explain the difference, the recon sampling we've now done is sort of done while you're staking. So our guy who's actually staking isn't really running around looking at the geology. He's just throwing a few rocks in a bag just to say, hey, well, at least we'll know if there's anything there, and then we can go back and stake more. So that's the recon sampling. So it's not a detailed sampling program. It's just a guy throwing posts in the ground, and he's going to go and grab samples while he's there. So that's why it's only, I think, 22 samples. But sure enough, what we can do as a company is we then get those recon results, and then we can make the decision to go and stake more before we put out those results. So that's exactly what we did. We got the recon results out. We went, wait a second, we need to stake a lot more of this stuff. So we went and staked a lot more. And at the same time, we had our expert geologist go on site, and he was seeing a lot of stuff that obviously was very interesting to him. So he went and collected, I can't remember, I think it's north of 100 samples now. And that's the more detailed sampling. So where he goes and looks at the geology and gets the different rock types and samples those. So a long-winded answer, but it's staked by the company. We own it 100%. I mean, the cost to do this is, between 10 and 20,000 pounds in staking costs. And now we own this project outright, 100%, no royalties, high-grade copper, high-grade silver, high-grade tungsten, and that's just the recon. So we've staked a bunch more ground. We have a lot more samples to come, and it's early days. Obviously, this is the early part of the exploration cycle, which is the grassroots stuff, but it's super exciting. So you get, as a shareholder, you get the benefit of the development work stream at Pilot, which is super important for actually getting to commercial production. But you now get the added benefit of this really exciting kind of exploration target nearby that could potentially form part of a bigger package down the line.
Oliver, lots of our listeners have heard this story. We've gone from 7p to 70p and come back a bit now at 55p. But I want you to give us the 2 or 3 minute elevator pitch that you would give to someone who's not invested for Guardian Metal Resources.
Yeah, I think where we're at right now, Phil, is we're seeing a transition of ownership of the company from, the more, I would say, the less risk adverse investors. So they're the ones who will look at a company at 6 pence and go, hey, there could be an opportunity for this company to do well, and we could make some money in kind of the 6 to 12 to 18 month time period. Now where we're at is we're a company that actually is proving something very substantial with our 2 projects in Nevada. And as we saw with the last raise that we just did, the $21 million raise, that was entirely subscribed for by institutional investors. So this is really now a story, I think, of investors who see it, the next leg of growth, which is from a development company, a PFS engineering company, to a company that's looking to go into commercial production. Because there's different parts of the Lassonde curve, and different investors have different risk appetites. So what we're seeing is just sort of a turnover in some of the investor base, I think, going from the kind of the, like I said, the less risk adverse retail investors to the more, I don't want to say sophisticated, but institutional investors who understand the value that can be created as you go from an engineering PFS level company to an actual commercial production, a company in commercial production. Because if you look at the multiples that companies can get who are producing X in revenue, that's where you can really grow the company. So, in the grand scheme of things, our market cap is still very small. You look at the scope of mining companies and in particular companies who mine tungsten as well. Even Almonte, I think, is a good example in their market cap and what they're doing in the development stage. So to answer your question though, I've said this before, I think we're just getting started. To me as the CEO, the first 2 years was getting the building blocks in place. It takes a lot of time to get some of these important building blocks put in place. A huge one for us obviously was the award from the Department of Defense to help us fund the PFS. We raised the $21 million on the back of that. So now we have call it $30 million of resources now to deploy, whereas before 3 weeks ago we never had more than $3 million in the bank. So we've just stepped up. This is the starting gun for us. We're now looking to build this from a development company into an actual mining company. And that's where I think a lot of investors can get excited is taking us along coming along for that path from a development engineering company to an actual company producing a very strategic metal for the U.S. industrial base. So we're early. The tungsten bull market, I think we're early. And, you know, guarding his position itself as, I believe, obviously biased, but I believe we are the leader in U.S. tungsten exploration development. So if you believe in the metal, if you believe that the U.S. is the jurisdiction to do it, then guarding is the, you know, the most important story right now, at the intersection of those two key themes.
From your point of view, if I was to put you in a TARDIS and take you 3 years further down the line, where do you anticipate that Guardian Metal Resources will be?
Well, our goal as a company is to have both of our projects in production before the current administration leaves office. That's where we're going. That's where we want to go here. And to I think give some comfort to that statement, you know, we have put together a team of engineers and geologists who have built mines in Nevada. You know, there's a lot of companies who will go out there and they'll do a PFS, and it's more or less a sales document, which is let's do enough engineering to get this thing sold. We are doing we believe a PFS that is going to be used, or is set up to be used to actually construct a mine. So obviously a lot needs, you know, there's a lot of work that goes into that, and there's a lot that we have to do on the engineering side, but we have the people in the places. We have people who have done this before, and our plan is to bring 2 tungsten projects to the U.S. market before the current administration leaves office. So that takes us about three and a bit years out. And that's a really exciting journey to go from where we're at now to, you know, potentially being in a position of owning and operating 200% owned tungsten mines in the United States of America.
How do you envisage that the DoD will help you to achieve those objectives?
Yeah, I would probably look at the U.S. government more broadly. You know, I can't put obviously words in the mouth of the administration, what their plan is. I can point to certain data points that I think give investors at least a steer as to where this could go. You know, we've received an award from the Department of Defense, which we are obviously very grateful for. That money allows us to really fast track a lot of the key PFS work streams. So that's already the DoD and the current administration, you know, supporting us in a massive way. I mean, that's a huge development for us as a business. What we're seeing is a lot of movement on the permitting side. We're seeing alignment between the various agencies, which is super encouraging. You know, a big part of what for us to get from where we're at now to commercial production, a huge part of that is the permitting side of things. So making sure that we have the right people on our team, which we do, but also, you know, we're seeing the administrations that are responsible for permitting in the U.S. work together to make sure that we can get to our goals. So permitting is a big part of it. You know, what else we're going to see on the government side? Obviously, I can't speculate what's going to happen. What I can say is, if you look at Perpetua as a good example, you look at MP as a good example. You know, these companies received initial awards from the Department of Defense, and they've seen a lot of other support from the Department of Defense, plus other agencies in the U.S. and departments to get those projects into production and to push those projects forward. So we're very grateful for the award we received. You know, we're looking to obviously tap into any tailwinds that are available to us as we push these projects forward. But what I can say is, I think this is, you know, I'm 35, so my career is not 50 years long, but over my, call it 15 plus year career, I've never seen a time to be exploring in a country like the US that I am right now. This is the best time ever, at least in my career, and I think probably ever, that's existed, to be exploring and developing and looking to mine in the United States of America. So we've got the timing spot on, we've got the metal spot on, and we got the jurisdiction spot on, the location. I mean, Nevada, not only are you in the U.S. where we're seeing tremendous amount of support from the administration, but you're in a jurisdiction that is very supportive of mining. So yeah, it's super exciting right now, and we'll see what comes of the government, but there's a lot of positive things happening behind the scenes, as you can imagine.
Is it possible from Pilot Mountain, Pilot North, Tempayute, that you could actually produce too much tungsten?
No, I don't think so. I mean, the U.S. is, call it 10 to 12,000 ton WO3 a year consumer. We can't fully replace that with those 3 projects. Our goal is to get to 4,000. This is obviously subject to the relevant engineering studies, but our goal, based on what we know with the projects now, is to get to about 4,000 tons of WO3 a year. So that would be, you know, 30 to 40% of what the U.S. needs. But no, I mean, 12,000, that's what the U.S. needs. It would take, you know, us plus a few other companies if the US was going to be fully reliant on domestic mine supplies. But, even going from zero, because right now there's no domestic mine production. So even to go from 0 to 10% coming from a US domestic mine would be a huge win. But to go from 0 to a number higher than that, which is what we're looking to do. And just to put some numbers in perspective for listeners, before China announced the export ban on February 4th of this year, about 4,000 tons of material was exported from China into the US every year. So what that means is that if we do get to our goal, then we could, in theory, fully replace the former Chinese tungsten imports to the US, which what a home run that would be, and what a great story. And more importantly, imagine how strategic and important that is for US national security. So can we do too much? I don't think so, unless you could get to, even if you could produce 15,000 tons, the US would be ecstatic, because then they could be fully self-reliant plus a net exporter. So we're looking to solve a very big part of the puzzle, and it would take us plus a few other companies to get to 100%. But that's not the desire here. Even to go from 0 to 40% would be a massive win, and that's what we're looking to do.
So the current tungsten price now, which I think is around the 5,000 or 500, I should say, or alternatively, I think I heard you say that's sort of around $45,000-$50,000 per ton. Is that right?
Yeah. So the current price is around $500 an MTU, which converts to about $50,000 a ton of WO3.
So at $50,000 a ton times 4,000 is $200 million of revenue for the product. And obviously, that's not all cash flow, because you got to get the stuff out the ground. So I think people are questioning the concept now. You have an £81 million market cap with $30 million in cash. So let's say a £60 million market cap, 150 million shares in issue. Where are we going? I'm not asking you to answer that question. I'm putting it out there just to say these are the figures that we're aiming for 3 years from now. $200 million of revenue. If tungsten doesn't go up in price, I mean, there's a lot of talk. People are saying $600, $700, $800, even $1,000 MTU. If it's not available, then it's going to be supply and demand and those things happening. So, yeah, I suppose from my perspective, what do you see as an end game? Do you see that GMET will be the end game producer and have this revenue? Or do you think a bigger player is going to come and say, thank you very much, and here's a lot of money, go away?
Yeah, I mean, it's obviously, we're just kind of speculating at this point where this could go. But, all I can say is, in terms of what we control, is what the next few years look like while we own these assets, is our goal and our plan as a business is to bring these into production ourselves. So like I said, we built the team, we have the engineer, we have the pedigree of gentlemen and folks who they know how to construct mines, right? So, is that to say that if someone came along and was interested in buying the whole package, we would obviously entertain that. We're commercial. At the end of the day, our job is to deliver for our shareholders. That's what we're here for as a management team. So all along, and right now, we think the best use of funds and the best way to deliver for shareholders is to de-risk these projects and get them into production. So, we see obviously M&A in the mining space quite often. That's typically how these things work. Smaller companies prove something up, a bigger company comes along and takes it. That's we've seen that, countless times. Is that going to happen? We'll see. I think if we can de-risk these and we become, a major producer of tungsten concentrate to the U.S. market and the leading tungsten company, obviously that's a very attractive company. So we'll see what happens. Our goal and what we're doing is we have our heads down. We're focused on delivering these projects, de-risking these projects. To go from where we're at now to commercial production is a lot of work. There's a lot of steps involved. You got to do a lot of engineering. So that's what we're focused on. And we think that if we go through those steps and continue to deliver, at the end of the day, we're going to be adding a lot of value to this company and growing where we're at. So we'll see what happens, but we got a team of guys who know how to build mines. So that's what we're looking to do here. And that's our goal.
Yeah. And I would add, I think you've got to add the value first, but once you've added that value, which you already have done a lot of, But I think there's exponentially bigger steps to be made through the PFS and through Tempayut. And at that point, then yes, it would be game on whether move forward yourselves or alternatively to bring somebody in to do it. But based on the other ones that you mentioned, with the funding available through the DO and maybe other channels in the US, it seems that from a company perspective, it would make a lot of sense to go produce.
Yeah, I mean, there's an opportunity here, and I had a really interesting podcast with a pretty well respected group late last week, and the question that we kind of touched on the same question is like, well, what are you looking to do here? What is the goal for you? And I kind of had reflected on it. I've been thinking about this, and it almost, obviously making my investors money is what we're here to do. That's our job. Right? We're here to deliver value for shareholders, of which we are shareholders. So by delivering value to my shareholders, I deliver value to myself as well, which is great. And that's what we're here to do. But this isn't a gold project. This isn't a project where there's just a monetary gain to be had. And what has become really exciting about this proposition and what we're doing is the position we occupy, we believe, in the landscape of the U.S. national security, and delivering a mined tungsten supply to the U.S. is so much more important than just the monetary value we think that can generate, because this is a metal that is so critically important right now. And yes, we need it for defense. Yes, we need it for the protection and the rearmament of the United States of America. But also, just speaking more broadly, we need it for nuclear fusion. We need it to build chips. We need it, for AI data centers. We need it to. The world needs more tungsten, right? The compounded annual growth per year is increasing quite substantially. So it's not like we're just looking to build a gold mine and deliver a bunch of value to our shareholders. We're doing that, obviously, but at the same time, what an opportunity we have to deliver a very critical metal to the U.S. market at a very critical time in the geopolitical landscape. And that, I mean, what a win that would be for the team to be able to deliver that metal to an industrial base who desperately needs it, and we can go use it to build amazing things. I mean, it's such a exciting opportunity that we have here to deliver these assets. So obviously the monetary delivering and the value delivering for shareholders is number one, but what a fantastic opportunity we have here to deliver very key metal to the United States of America and use that metal for the good and for building some fantastic things that will make the world a better place.
Indeed. Thanks for your time, Oliver. We'll speak again soon, I'm sure.
Yeah, let's do it. Thanks, Kev. Appreciate it.
So, Charles, having had lots of time on the beach and lots of ice creams, what's your thoughts on what's been happening during the summer in the markets?
Well, I think there's a lot of people who sell kind of mid-July and then come back early September for the summer holidays. They just don't want the stress of, waking up and dealing with selling AMRNs, which is fair enough. But, as with every month in the calendar, there's been good spots, there's been bad spots. I think Byzant's RNS that came out a few days ago, that was pretty good. I think AMRQ, regardless of the market reaction down a few percent, but the fact that we're going to get superb optimization of the processing plant, that's looking pretty tasty. Some of the explorers that we're keeping an eye on are coming out with some pretty decent assays as well. So it's all kind of going rosy. But I think basically, a lot of the people who would normally be in the market at the moment are just sit on the beach enjoying themselves. What about you? What have you been noticing?
Yeah, it's the same though. Though I have to say this summer has been busier than the last two summers. As in not as many people have gone away as I thought. But yeah, I mean, even obviously everybody's human, so all the CEOs seem to be gallivanting around the place as well. So it's hard to catch them. But there's been some really good updates, I think. I mean, certainly the stuff that we heard this week from Byzant was for me a game changer. All of a sudden you are not many months away from a producing mine now. Obviously finance is still to come, but I think that finance is, even based on what they have said, is in progress. So all of a sudden you're going to have a £8 or £7 million share with probably about the same value in Blackstone shares and a producing mine. As you said, the free cash flow after the first 12 months is going to be in the $20 to $30 million range. even if financing takes some of that away, how do you work that out? That value of that company is £7 million. It just doesn't make any sense.
Oh, well, it doesn't. I mean, we've done the free cash flow numbers before, and there's the Blackstone Minerals covering it as well. So, yeah, I think things can always go wrong, especially in mining, especially when you're building a plant. But, this is a very simple operation, so it wouldn't surprise me to see it do a 5x 12 months from now. But I guess we'll, wait and see.
Yeah, we'll wait and see. I think once the finance comes, everybody's going to see that it's real, and then, maybe start to pile in. But we will see. We will see.
I think the only other thing I'd mention on that is African Pioneer, simply because they have a similar license for Ngombo in the same country, Namibia, that was awarded roughly the same time, has the same people involved in it, has a much smaller market cap. And you'd imagine if financing was coming for Bazan and Hope and Garb, that Ngombo African Pioneer wouldn't be too far behind.
Yeah, the reality of the African Pioneer situation is that this plant, in effect, helps Ngombo, okay? Because it is connected by rail line from Ngombo to this plant, like 2 kilometers away from the plant. So the reality is that what does that mean to African Pioneer? African Pioneer probably is one step behind Hope and Garb, because probably you need to do a bit more drilling and a bit more sort of work on the ground to say this is what the resource is. But then once that's done, it has the opportunity then to either have a plant on it itself, or it can ship it probably again reprocessed or sorted or to this plant. So I think it really does affect African Pioneer as well, even though nobody's really drawn those two parallels. But I think that is the case and will be the case, And you've also got in African Pioneer, you've got all these licenses in Zambia that, are going to attract. And Galileo's got some, and Extract's got some as well. And all of those, I think, together are going to be, a parcel of stuff that one of the big boys are going to work on, I'm sure of it. I mean, they already are working on it, obviously.
Yeah. I think it's the time, like now, is it the time that Colin is actually starting to deliver? Because ultimately this is kind of, there's been a lot of negativity on the board saying, it's another one of these companies, but do we think now is the time that this people will start waking up, seeing that Colin is actually delivering something?
I think it's not so much Colin, so much as the copper pricing, the gold pricing, the febrile nature of the markets, and the fact it's cyclical. I mean, it's been no secret that junior resources have kind of beaten down over the past 3 or 4 years, and now it's coming up again. So during those years, when it was quiet, when nothing was going on, when share prices were falling, Colin was still advancing the business case across the portfolio. And now that the deal making, the M&A atmosphere, the production atmosphere is significantly better, he's positioned the portfolio of companies to profit and to rise and to recover. So I think and I think the other thing is that once you get one financing deal in place for one of the companies, I imagine it will be Bazan first. The market sentiment will be that the rest will follow, and they probably will.
Yeah, I think when we were over there, the one that was most advanced before we saw Hope and Garb was actually the one in Galileo, Lewin Sobe. So Lewin Sobe, I think he's ready to go, as in ready for somebody to do something, either for it to be sold, for them to progress themselves as well. So in terms of Galileo, that's a big thing. Then the other one was Silver King, that was in Extract, which we've seen stellar results so far. And Glencore used to own that resource as well, and had done a lot of work, and also there's a lot of artisanal work there. It's huge silver, huge copper potential there. So they've all, the 4 of them have all got catalysts. And I think you're right in what you're saying, Charles, but I think if, the money actually comes on one of them, probably all 4 boats will rise.
Yeah. I think the Mankind, just going back to Bazan, the Mankind project, looking at that, it's a tier 1 asset from what I can see. And I almost think it's too big for the likes of Blackstone. So I think they're going to get some sort of major coming on board with it.
Yeah, well, I think the Blackstone thing is that when Macquarie did that raise down under, Colin / Bazan could have sold those shares at a really good return since they were issued them very easily on market, because there were lots of willing sellers and that raise was oversubscribed. But he chose not to, chose to retain them. History will judge him whether that was the right thing to do or not. But clearly he sees further potential in them. So I guess we can wait and see. Yeah. Speaking of some of the stuff, Kevin, I mean, here's a question for you about Greatland Resources, because obviously the share price is rocketing, and then shortly after the ASX IPO, the guidance changed for all-in sustaining costs changed, and a little bit of worries came out. What do you reckon happened there?
Well, I don't think they thought that the changes were going to have as dramatic effect in terms of the share price as it did, and that I think that could be twofold. Slightly the conspiracy theory in terms of this, and I believe there's a lot of individuals in Australia that want in on this, and they probably want in at a lower price than they were getting offered it in terms of when it went to market. It has had quite a run, let's be honest. It's up 100% on the year from January as one of the choices that we had. But with the way gold is, the way the copper is, I still think it's probably seriously undervalued. Telfer, for me, when we did speak to Sean, I think Telfer has a huge amount of opportunity that wasn't really looked at properly, because they weren't really interested after a while, because they didn't think it was going to be that efficient, because the all-in sustaining costs were pretty high. But when you combine that with the other assets now that Greatland has, which I presume is going to be a much lower all-in sustaining costs, then it makes Telfer much more amiable, and also we've got a much higher gold price. So therefore, there's a lot of different factors now that are being factored in that should mean that it's just going to be throwing off lots of cash. I mean, how much cash did they actually accumulate in the first 6 months? Something stupid.
Oh, they're over zero. I think was it 575? There's some ridiculous amount of money. But I think looking back, we calculated, didn't we, that they needed 4 more quarters of gold prices where they are, even with the reduced guidance, in order to develop Javier without any debt, which is something unthinkable a few years ago. And if, basically you just need enough ore at Telfer to bridge that gap, and then you can use, once you're getting Javier into production, $1,000 roughly, all the sustaining cost. If you've got $3,000, $4,000, $5,000 gold, then you're just going to print money. So, yes, you can have a conspiracy theorist in you, and yes, also I think changing the guidance so quickly after listing on the ASX was possibly not a good look. But over the longer term, I think it's probably got another 100% in it, even if not more.
Yeah, I mean, again, it's not conspiracy theory in simple terms, but if we look at the fiat currencies across the world, Trump is desperate to get the dollar devalued, desperate to have lower interest rates so people don't see their bonds as attractive, etc., etc., etc. So, what is going to happen to the dollar value of gold? In my view, it's going to go up over the next period of time, regardless of what's happening in terms of how much gold's being produced, etc., etc. It's just the economic winds are moving it this way. And I mean, we've had conspiracy theory conversations about, and I've listened also online to some of them about what they think that the US is going to do with their gold. What are they going to do? They're going to revalue the whole lot.
Scott Besant was saying he would doubt. He said he would doubt the US would revalue their gold. When a politician says he didn't rule that out. He says he doubt that they would do it. So.
It's usually followed by a quick U-turn, isn't it?
Yeah, it is. I think the thing is, obviously, if you revalue the gold, you'll, cause some massive levels of inflation. But then the argument is, obviously, when you've got the debt level where it is, and it's got $37 trillion or whatever it is now, you're going to have a massive, horrible economic shock across the world anyway. So, it's probably the solution, or potentially tokenized gold. But I guess we'll see. But I think the big thing for me is...
And then what happens to places like AMRQ, Greatland Gold? They don't go up 100%. They could go up 1,000%.
Well, this is the thing, right? Because when they started building Nalanac back in, 2018, 2019, even 2017, and gold was, $2,000, and they thought it'd be profitable then, and now it's closing in 3.5. Or even when Sean and Al were talking about buying out the farm stuff and Javier, they almost certainly didn't see gold going as high as it is now, and sustainably being here as well, because the gold price hasn't moved in the past few months. When it's up here at record highs, you'd expect it to be really, really volatile, but it's just not happening. It's moving within a couple $100 range, and it kind of suggests to me that either it's going to come crashing back down in the next few months, or it's going to go shooting back up. to new record highs, 4,000 and above. And if I had to guess, I'd say we'd be closing in on 4,000. And the funny thing about this as well is that if you are under the impression that there's going to be a global recession / slowdown, which I think will happen, I think it's kind of inevitable. But if you think that oil prices come down and that's the majority of all in sustaining costs, and you could have a situation where gold's at record highs but oil is crashing, and then your profit margins are ridiculous. But that goes for all gold miners. So I guess we'll see.
Indeed. So what else has been happening, Phil?
Yeah. Well, copper resources have had a pretty good session of I think they're up about 33%. I don't know if you saw a couple of RNSs came out. We saw one regarding the rare earths, and basically the system has extended beyond Boland. And then there was a more recent RNS where they talked about the low-cost recoveries from the optimized testing, which are the highest reported recoveries from that weakest lixiviant acidity by an Australian ionic clay project. So markets really, really like that one.
Yeah, I can safely say that you now have a double bagger in the picks, because that's up over 200 and something percent from when you picked it in January. So well done.
Well, it's fun, isn't it? Like the rare earth stuff, because, you know, out of the plug AMRQ again, AMRQ searching rare earths, but also Harina Resources, I think, is one to keep an eye on. Share price down since the IPO, but again, you know, ionic clay, very simple solution project. COBR, as you say. And basically with the rare earths, I mean, this morning China has put more restrictions on rare earths airports. So, and then at the same time, you had the US, you know, for the first time ever, the DoD took a $400 million equity position into MP Materials, which is the only rare earths producing mine in the United States. And also I think it was $150 million state-backed loan, and then a price floor for the rare earths that they're going to develop and build out that mine. So you're seeing the Western world now the states are actively starting to compete with China for metals for the first time in decades. And you see it with, you know, the grant funding for Guardian Metal as well, you know, along with various others. And I think you're just going to see more and more of that. You're going to see price falls for critical minerals, state direct investment into equity, but also loans to get things up and running and pushing faster. Because it's not just Trump, you know, in the US, but the US as a whole, even when Trump goes, Europe, Australia, the whole of the Western world needs metals to counter China and China's influence. It's as simple as that. So that's going to be
more than just it's not the green issue anymore, isn't it? It's controlled almost.
Yeah. Well, is copper the new oil in a world of electrification? If you genuinely believe that the oil will run out in the next 50 years, and they've been saying that pretty much forever, but if you do, the copper doesn't run out. Once you mine it, you can continue using it practically forever. If the oil runs out, it's a one-time use and then it's gone. So which one is actually going to be more valuable in the very, very long run?
Yeah, copper for sure. But just looking at picks last year, from the start of this year, we're up nearly 76% over across the board. But I want to concentrate on the ones that haven't done so well, which we think might start to do quite well. So you got Jubilee Metals, you've got Tiger Royalties, you've got Rome Resources, you've got Immu Pharma, you've got AMRQ, which we've already mentioned, and you've got Priority Intelligence. They're basically the ones that haven't done well so far this year in terms of price news. So any comments?
Well, I could comment on all of them, but yeah, maybe start with Jubilee, right? Because that transaction up to $90 million to sell the South African operations. Now, I'm not going to go into again whether you think that's the right thing to do for the company, because ultimately, we're beyond that now. So let's just talk enterprise value. That deal has an enterprise value of $146 million, or $90 million over stage payments. But that $146 million is a 6-point multiple on the financial year 24 EBITDA of the assets being sold. Now, if you look at Jubilee's share price, market cap in £94 million. $90 million coming into the company. And then so basically what you're saying is that all the entirety of the assets in Zambia are valued at an enterprise rate of 0, which is obviously crazy. I mean, the point is that if the market is valuing all of the Zambian assets at nothing, but then you're about to put $90 million into those Zambian assets, and also almost certainly have share buybacks, and that's going to recover. I think Jubilee, is one kind of an easy buy. And also the sentiment is very low. The sentiment is very low, and also I suspect there's a seller in the background there.
Yeah, we know there's been a seller. We know there's been a few funds that have had to liquidate. So, I mean, I think it's been a true storm, if you like, or a perfect storm. in terms of all the things that have happened. But once those things pass, as they always do, then yeah, it could be in a different situation.
I just think it's one that, you know, just basically double down on. And then Rome, I think basically you've had a kind of obviously you've had the violence in the Congo, which is now settled down again, as it always does, peaks and ebbs. But that maiden mineral resource, which is going to come out in a month or so, I think is going to be really strong. I think they're underselling it, the company. When you do get that maiden resource, then you're going to have, you know, IRH just taking a position in Alphamin next door. I wouldn't surprise me to see Alphamin want to get involved in some way or another. But that maiden resource, I think it will be really, really good. And then we're just waiting for that for September. And hence the share price hasn't moved really up or down because people know it's coming in September. So there's a lot of people who won't put their active capital towards Rain until that happens. What else? What
about you, Phil? You're the one who chose Priority Intelligence, so give us your thoughts on that.
Yeah, I mean, they've obviously had a lot of updates since they've listed at the sort of, it was the back end of last year, wasn't it? The Christmas New Year listing. Been a lot of work gone underway. Obviously, they've announced that they've effectively got the treasury, you know, the payment system for Bitcoin. Obviously, this protocol Prybit, isn't it? And effectively, it expedites, speeds up the whole process of taking these Bitcoin payments and other stable coins. I think on the last RNS, or effectively, we can assume that they've got 5 Bitcoin in the treasury now from memory, and correct me on that one if I'm wrong.
That's at least 5.
At least 5, yeah. So that's looking pretty good. They started to build into that, but they're not a pure treasury player, as we've said before. You know, it's much more than that. I'm shocked, not shocked. I'm surprised that they haven't moved up a little bit higher on this sort of ream of news that they've had to market. I guess that I think Charles has summed it up in the past, saying that you know, we're probably looking at revenues from the, you know, the number of clients that they've got in terms of break-even numbers. But it looks good. But I guess we've got to wait for the market to assign value to it.
Yeah, absolutely. Yeah, all of these things can look good. I mean, even one that isn't down, it's more up. It's nearly up 100%. Is Bazan, and it's the same situation. The world has to assign value, or the market has to assign value. So one of the other ones was Tiger Royalties. Seems to have gone quiet over the summer, but there's a lot going on there, and it needs its own podcast almost. But the Tau situation in terms of the developers, I think, is very interesting. Based exactly the same, around the same ethos as Bitcoin. And they've got fingers in many different pies. They took an investment, $500,000 investment in that Satsuma thing, which is going to be, or is already worth more than they obviously put in. Obviously, depending on that share price, but they seem to be not worrying too much about the share price at the minute in Satsuma. I mean, more, let's get huge assets on board. What else is it? What about Pharma then? Pharma down sort of 50%.
Yeah, I just think there hasn't been much of an update, has there, from memory? You know, looking at them, that they need some news to market. I mean, they had some great news on their main kind of drug released. I think it was back in May or April time. So there's kind of like, when companies are not releasing frequent news, you know, we're not seeing sort of any kind of interest in the stock at any point. I mean, Solvonis is a good sort of, it's not comparison, but you know, within a similar space. There was a great article written this week. I actually thought Charles had written it at first. It was kind of similar vein. I think it was a proactive writer for, was it This Is Money, I believe, that went out, and that seemed to spark quite a lot of interest in the stock as well. And obviously you did a good interview with Anthony last week, which, you know, really delved deep into the kind of the products, the different MB, you know, 1, 2, and 14. So what do we make of that? There's been a slight retrace this week in it, but where do you see it sitting?
Yeah, I mean, I think Solvenus is going to be one of those big winners in the pharma space. I mean, if you talk, you've got the NHS partnerships and very long partnerships with UK government bodies. You've got Professor David Nutt, who, you know, it's had significant success in the past. You've got a phase 3 clinical trial, you know, for alcoholism use disorder. That's, you know, if it replicates phase 2 and is successful, is going to, you know, potentially become a new standard of care. And then you have the ability to, you know, develop that ketamine plus, you know, therapy, you know, spread it basically across the world. We know from that conversation we had with Anthony that he's already talking with major pharma players. The natural partner would be Johnson & Johnson, just because they already have a blockbuster drug in the form of Spravato.
Yeah.
So, you know, with a similar kind of profile. But it also could be AstraZeneca, given the UK side and how much AstraZeneca works with the NHS. But basically, one of the key things with Solvenus that I really like is that they're taking a proven drug and then repurposing it for a different use. Now, when you do this, sometimes you get a blockbuster, but often you don't get a blockbuster. Often what you get is you get something very profitable, which you can be delivered very cheaply. Now, when we live in a market, a small cap market where raising capital is difficult, expensive, and dilutionary, having a product that you can develop cheaply and send to market cheaply is, really, really, really important. I think the phase 3 trial, I think it was 2.25 million, which is kind of unheard of, right? So when you compare that to other pharma companies in the space, many of them are working on really, really exciting revolutionary new drugs, right, or new treatments, which they've designed from scratch. The vast majority of those are going to fail. And that's not any company's individual fault. That's just a nature of the system. These are drugs that are really, really difficult to create, which is also why you get rewarded so handsomely when you do well. Yeah. Sylvanus is developing something which is lower risk, potentially lower reward, but then the rewards are still very lucrative compared to the size of the company.
Yeah. So if this esketamine, this Spravato you mentioned, that would if they have a product that's as similar to that, or even very close in terms of efficacy, do you think that would make them a very you talked about this bridge in kind of like different medicines or whatever you want to call it? Would you say that this makes them a target for someone at the current, the price of 25 million?
Yeah. I mean, they can definitely become a target. However, when you repurpose a drug, especially when there's a kind of therapy involved, generally what happens is you get a deal, right? Where the major comes in and helps you distribute it and then see how it works in practice on a larger scale. And you get a bit of money tied to that. And then if they like the look of how it's going on a practical scale, they'll then buy you out maybe a year or two later, which is it is a very common pathway, because you can do phase 1 trials and then phase 2 and then phase 3. The thing is, when you have a therapy, as in talking therapy, which is basically what this is, in addition to getting a new kind of therapy, when you're delivering it in lab, or even across larger scale across the NHS, it's the smaller the number of participants, the easier it is to make sure that everybody gets the same kind of therapy. The larger and bigger scale it gets, the harder that becomes. So obvious, but this particular one, I think it's only sort of 3 sessions of therapy per treatment. So it should be, not that complicated, but I would imagine that'll be what will happen. You'll have a deal with a major pharma company who comes in to help deliver it on a grander scale. And then if they like it, they'll buy it.
Yeah.
And yes, in terms of the price, a very significant premium.
Yeah, I think the upshot is, it could be tens of bags, I think, ultimately, if any of these work. That's my view anyway, in terms of valuation.
I guess we'll see. I guess we'll see is kind of a catchphrase at the moment, but I think with with explorers in the junior resource world, or with pharma companies, in clinical trials, they're actually very similar risk profiles, right? In that you have very strong initial indications, and then you put your money where your mouth is, and then to an extent you have to cross your fingers. Now, when you're in phase 3 trials, that's very different, right? And it's almost like equivalent to infill drilling. But yeah, I think Sylvanus is going to do multiples from here again.
Yeah. What do we make of the Ethereum news that was released on Friday, this collaborative launch, this AI-driven exploration tech in conjunction with spin-out of the University of Cambridge, backed by the Royal Academy of Engineering and entrepreneurs? Did you see that news? Any comment on that?
Well, it's the Cobalt is, the Bill Gates backed thing is, basically a major now, and they're using AI to, establish drill targets. We're using AI to establish, clinical candidates in pharmacy. And, when it comes to mining, I think artificial intelligence is going to become more and more of the standard. There's a couple of others that I'm tracking, but I'm taking positions at the moment, so I won't mention them maybe next week. But you're seeing this kind of situation where, let's say you use an artificial intelligence program and you can improve your drilling targets by, say, 10%. For a junior resource company, that might not be that significant, but if you're spending hundreds of millions of dollars as a major, then suddenly that becomes really, really important. If you can improve it by 20% or 30%, it becomes massively more important. And I think you're going to get this more and more, because as countries do a lot of countries, particularly in Africa and South America, are doing whole country surveys, right? Of their geophysical, of their geodata. And so if you can plug that into a computer and get all the best drill targets, it could be quite fun and quite exciting.
Yeah, I picked Ethereum a few months ago, as you remember, for my last pick of this year. And they've got things going on so many fronts. They only need one of them to come off. I mean, it's £4 million market cap. I'd be very surprised if it's not 8 to 12 million by the end of the year, based on just progression in all the different areas. And this is just more interesting stuff that comes out there if they go searching. I asked Charles if he wanted to talk today, and he said no, not yet, which tells me that obviously maybe there must be something else coming. So I think with Morocco, with Rwanda, with the stuff they've got in Botswana, which is very interesting as well, and now they're using some tech to try and find different things. Plus, I also know that they're investigating other proposals to do JVs with other people. Then, I just think there's a lot of moving parts, and it's only going to take one, maybe even two to come good, and it could be worth significantly more than it is now.
Yeah, and the shop's open for sales, by the way.
The what?
The shop is open for sales. Do you know that Incantera announced that they've got the Skin Cell commercial website is now open? So I got a care pack which I've actually opened, and I will send some photos of it. They've actually launched with the face, body, hand, face serum and eye cream, all of which I've got a few little samples of in the care pack. And I'm going to sample it and hand a few out to sort of friends and family and see what the kind of feedback is. But good news that they're actually now finally, able to sell that through their. It's www.skinandcell.com. If anybody wants to have a look at the products and try a few, then scoot on over there.
Yeah, I was speaking with Suzanne during the week after we organised the stuff coming, and they've made a few sales from what she told me already, and the big push starts on Monday, I think, with the agencies. So I think again, it's another one of those ones that's got absolutely exploded because of the guy challenging the stuff that they had. It basically destroyed the share price. So here we are again. And if you remember, Phil, I think at 5-6p was where we first bought it, like a year and a half ago or 2 years ago.
Yeah.
They went a long way. And then subsequently, somebody decided to stick the boot in. We're back here again.
It's interesting because, as you say, this kind of like marketing agency model is it's within their interest, of course, to sell as many of these units as possible, because obviously there'll be a commission basis on that, and they're obviously going to use influencer-led type marketing as well, sending out packs to people who are influencers or people with a big social media presence who've got a lot of followers who they can kind of mostly big people who've got a face for that within the cosmetic and beauty industry. So it'll be very interesting to see what sort of sales and where. I think that their projections were to sell, was it 200,000 or 100,000 units by Q1 of next year, end of Q1? Was that something that was about right from memory?
Yeah, 100,000 units, I think, which is going to, be somewhere in the region of several £1 million worth. And then subsequently after that, who knows?
Yeah.
But the interesting thing is, the difference in the model may be slower. It may be slower, but actually maybe quicker as well. Is that this way they get all the data for all the customers. So I suppose the question I ask you, Charles, is it more value accretive to sell the product and probably have a higher margin on the product, but maybe sell slightly less, but have your entire client base within your control? Which is better?
I think you just want to sell as much as possible. Volume beats everything always. You want to get to a point where it's on supermarket shelves, it's on Amazon, it's a top seller. I mean, but the most important thing really is does it do a better job than current skincare? For example, I think the eye cream is probably the one that will do the best in terms of initial sales. And basically the idea is, ceramides, peptides, vitamin B3, Skin Plus Cell has found a novel way to get these ingredients deep enough to reach the cellular layer of the skin, right? So the idea is that it is more effective than everything else currently on the market. Now, if it is more effective, then you will be able to notice it on your face when you use this product, and then word of mouth will roll like fire across social media, and then it becomes a takeout target. And basically, until I haven't tried it, I'm going to go buy some, and we'll see if it works. Because I think that's the only thing that really matters. Does it work when you look in the mirror?
Yeah, Phil can send you a sample.
Yeah. Then some more, drop some off when I'm down your way. I had a nice holiday, a little bit of a break down your way. Charles ended up in Salcombe, drove past Exeter. Thought, should I call him? But I thought no, because you'll still be working at your desk anyway. So
I've taken a bit of time off.
Have you? Good.
Well, I think the problem is, like I said, I mean, it's people have had companies. Well, okay. We used to have an agreement in the financial world, and it was funny to me because it was all the way from like the blue chips I work with, all the way down to the smallest, tiniest microcap, that nobody released any news in August, and we all went on holiday and did nothing.
Yes. That
Right?
sounds like France. It sounds like the continent or Italy.
Well, it was everyone, right? Everyone was like, well, everyone's on holidays. There'll be no trading, and we're not going to put any news out. We're not going to do anything at all. We're just going to chill out and relax and just go to the beach. 1st of September was the busiest day of the year every year. But this year it's not happened. Everyone's continued to work. And when half the people continue to work, you're then forced to work yourself. And so, no, I haven't. I've had some time off, but not as much as I would have liked. But the thing is, the problem is it's kind of making hay while the sun shines when you freelance, right? Because at the moment, every client I have is piling me with more work than I could possibly be able to do. So I'm taking as much on as possible, because if there is a recession or a downturn, there'll then be significantly less work for me to do, and I can just relax and take time off until the economy recovers. And it does feel to me like we're going to enter into that within the next 12, 18 months. So yeah,
ending on a cheery note as usual.
I don't know. It could, the part of me that could just keep playing for the next 30 years, of course, because it seems like we should have had a crash, like a proper crash that lasted when the pandemic struck, and then when Russia invaded Ukraine, and then when Silicon Valley Bank and Credit Suisse collapsed. And then, I don't know, every 5 minutes there seems to be a major geopolitical crisis. Yeah. And Donald Trump does his latest thing, but the market just doesn't seem to care anymore. So maybe I'm completely wrong.
Absolutely. Okay, well, I guess, should we wrap things up for the Sunday BBQ on that note and say thanks for listening. If you do like what you've heard, please subscribe, hit the bell icon, any future notifications of further episodes, and have a great summer, y'all.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of the Sunday Roast, please email admin@thesundayroast.net.